The Advanced tab is where we just drop all sorts of miscellaneous stuff. Default order entry type is either loaner, quote, or sales order, and this determines what order type is defaulted when you select to enter an order for this customer. A sales order is clear a sales order. A quote is clear what a quote is. A loaner basically means you're entering a type of sales order where you're telling the warehouse to ship something to somebody, but you're not going to invoice them. It's a loaner. That means you're lending it to them for evaluation, for a trade show, for any number of reasons, but you expect to get it back. What happens at invoicing time or shipment time is if it's a loaner order, the system creates what's called a shipper document instead of an invoice. The goods leave inventory and are recorded in the loaner or pending table, and only a packing list is generated, no invoice is generated. And further down in the training, we'll get to loaners and pending and how to process them. GSA is a flag whether or not this customer is on the GSA schedule. Console code is a consolidation code. Some people receive, for example, our customer Cy Kessler is a battery distributor down in Texas. They'll receive ongoing orders from, let's say, Zales stores. And the Zales stores will place their orders as they need the stuff, but Kessler only ships to them once a week. So what happens is during the course of a week, they may get 4 orders for one store, and this consolidation code tells the system how those orders should be consolidated into a single shipment and a single invoice. Then consolidated release. If there's a value in here, you can tell the system that accept orders for this customer until you get to a certain value, and at that point release them and ship them. So in the case of Zales, the stores automatically by EDI order batteries. The batteries cost anywhere from pennies to dollars. And Zales doesn't want a shipment being made for $2 worth of batteries. So they set it up that until the order has a value of $20 or $25, just accumulate the orders and then ship it. You have a default division and default department. That allows you to set up the division and department that the order should be assigned to when the order is created. In the Stream system, the difference between a division and a department is a department is a cost center, which means it has income and expenses, so you can produce a profit and loss or income statement for a department. A division has balance sheet accounts and is normally a separate company. So you can have a situation where you have multiple companies, usually owned by the same entity, operating out of the same warehouse, where you have one company that sells to retailers, one company sells on the web, and a third company sells locally or to resellers or end consumers, and they all share the same customer base and the same product information, but they're different divisions because they have different financial statements and produce separate tax returns. And then on a periodic basis, you perform intercompany reconciliation, and that's covered in the accounting training. Then moving to the right, we have web access. You have an internet code that allows this company to access the e-commerce. You have a credit reference code. This can be given out to people when somebody contacts your company and wants a credit reference on somebody. you can give them this code. They can go to your e-commerce site and they can download a credit reference. Then web ship edit, that's a flag that says when this customer places orders on the e-commerce website, do we allow them to create or edit ship to addresses, or do they only ship to one spot? This is a security feature. It defaults to no, so that if you have a customer, they can only ship goods to their ship to address. They can't create a new one or edit it. This is a security issue in case somebody gets their login credentials. They can't log into your system and order stuff and have it shipped somewhere else. Then we have currency surcharge up and down. The currency surcharge feature is used when you sell in multiple currencies. So for example, you're shipping products to Europe and you're selling them in euros. You can determine using these who carries the risk of currency fluctuations. If the euro today is $1.20 per euro and you've priced something in euros, you can say, using this, that you will absorb any changes in exchange rate up to 5%. If the exchange rate changes by more than 5%, then we've got to renegotiate the price. Then moving down, you have a default bank account, default bank and default bank account. This lets you set up a customer bank account and bank in order to do ACH automatic withdrawal, that when you send an invoice, it automatically sucks the money out of their account. Moving over to the left here, we have our EDI processing codes for orders, quotes, confirmations, shipments, invoices, statements, dunning letters, and reports. And this tells us how they are processed. For example, for invoices, the E code means that the invoices are all emailed to this customer. You have other codes in there, A, B, and C, for example. A means that invoices for this customer are sent only for EDI orders. B means invoices for this customer are sent by EDI for all orders. C means invoices for this customer for EDI orders are sent by EDI, and orders that are not received by EDI get sent by email. So depending upon how your EDI implementations are, you can set the codes in here, and that's covered in the EDI training. Here we have the geocode for the customer, just like we talked about for the ship to, and latitude and longitude.